I do think we're going to see gold. If we were to fast forward a year from now, I do think we could see gold maybe push a little bit higher over the next month or two. But overall, I think we're going to see it pause and take a little bit of a pullback and build kind of a launch pad as the stock market, the economy, I think is going to soften potentially like by the end of January. We're going to see things turn. And then we're going to see a big move up in gold. This is the stock market cycle. And I believe we're getting very, very close to a market top. And this is when gold performs exceptionally well. It's also when energy stocks perform exceptionally well. And so whenever there's a bit of fear in the stock market, I think we're going to see gold, silver, and miners want to move higher. And that is exactly what we're seeing this week. And really, they have been moving higher for several months because the whole world is getting nervous and they're moving into the precious metal space.
The year 2024 marked a historic milestone for gold, with prices achieving unprecedented gains. Starting at $2,000 per ounce, gold surged to nearly $2,800 by year-end, underscoring its enduring appeal in uncertain economic times. This remarkable ascent reflects shifting market dynamics and strong investor sentiment, reaffirming gold's status as a safe haven asset. The recent surge in gold prices can be linked to several global economic factors. Amid persistent inflation and currency volatility, investors increasingly sought gold as a reliable hedge, emphasizing its critical role in preserving stability during market turbulence. ChrisVermeulen of the Technical Traders analyzed gold's remarkable performance in 2024 and shared his outlook for 2025. While he anticipates further upside potential for gold through late January, he predicts a subsequent phase of sideways or downward movement lasting several months. Beyond that, Vermeulen foresees the start of a significant multi-year rally, projecting it could span 4 to 6 years and offer substantial opportunities for long-term investors. Gold has long been prized for its stability during financial turmoil, a quality that shone brightly in 2024. The yellow metal surged by over $700 per ounce, marking an impressive 34% gain since January. This remarkable performance underscored gold's role as a safe haven asset in uncertain times. According to the Precious Metals Forecast 2025, the factors that fueled gold's ascent to record levels this year are expected to persist into the coming year, suggesting the potential for continued strength in the market. Vermeulen said, "Gold could still go higher here, but that easy run, the measured move, is played out at this point." While Vermeulen remains bullish on gold and holds significant physical assets without plans to sell, he predicts that gold may experience a pause or a pullback in the coming months. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
We can see that on the monthly basis. The monthly chart is very accurate for gold. And when we take a look at it, this is the reason why we talked about more or less 2750 for the upside in gold, which if we were to go back to the start of the last super cycle in 2003, somewhere right in 2001 in here, if we use a Fibonacci extension, which is my favorite tool, I've found it's the most accurate tool to project forward targets. And we're going to the bull market 2011 to the pullback in 2015. And if we carry this forward, this is where it tells us the momentum from this rally up and the strength of this pullback. Once it starts to build a base and then start a new cycle to the upside, which I wrote an article talking about the new super cycle for gold has started, then we should see that the move up to 618 level. Generally, if you pause at the 618, you're going to go all the way up to this one level, which is the 100% measured move. And that's that 2750 area, which we've now tagged on the monthly chart. And now gold is taking a pause. Gold could still go higher here, but that easy run, that measured move is definitely played out at this point. So as much as I like gold, I own a lot of physical. I'm not planning on selling it. I do think we're going to see gold. If we were to fast forward a year from now, I do think we could see gold maybe push a little bit higher over the next month or two. But overall, I think we're going to see it pause and take a little bit of a pullback and build kind of a launch pad as the stock market, the economy, I think is going to soften potentially like by the end of January. We're going to see things turn. And then we're going to see a big move up in gold. And this peak right here is very similar to what I believe is the 2007, 2008 peak, where gold did the same thing. It rallied up, it paused sideways for a couple of years. And then we saw the whole world move into gold because they're worried about the stock market being overvalued, bubbles in real estate, all of that stuff. And then we had that pullback in gold with the rest of the economy, just because everything generally goes down together when investors are selling. and then we go into a multi-year huge leg. So that's what I see. If we were to look forward, a year from now, I think we'll have seen multiple months of the price going sideways or lower, and then it's going to be that big rally for 4, 5, 6 years. And that's when the miners are really going to participate, and we're going to see that everybody's going to want to be involved in the precious metal mining space because they're going to do those hundreds or thousands of % return when gold blasts off in this new kind of economic reset. So that's kind of what I see from the big picture of gold.
Silver prices recently experienced a significant surge, rising 4.12% to $32.25 per ounce, sparking renewed optimism for the precious metal. This jump aligns with a broader pattern of bullish indicators, hinting at the potential for further price gains. With silver now holding above the $32 mark, the focus shifts to whether it can maintain its upward trajectory and test key resistance levels. From a longer-term perspective, experts emphasize silver's undervaluation compared to gold and its historical inflation-adjusted levels. This disparity suggests that silver still has considerable room for growth, positioning it as an attractive investment opportunity in the evolving market landscape. ChrisVermeulen stated, "I think we're going to see silver move up through the end of January and test the highs we saw back in 2012. He predicts that silver could climb into the $36 range or beyond. Vermeulen advises investors to stay cautious and adjust their stop-loss levels to lock in gains, as sharp market corrections can happen unexpectedly. Now, let's redirect our attention to a video.
I think we're going to see silver move up to the end of January. And we're going to get up into these highs that we saw back in 2012. Silver might want to push up into this $36 range, poke a little bit higher. It is in a nice uptrend. I mean, we've got a nice trend moving higher. We have a rally, a pause, a rally, a couple tight little bull flags that are pointing to go back up and test the high from a month and a half ago. So I think we're going to go up. This is going to be a major resistance level, this whole zone in here between this high and this candle wick high. And of course, we got a lot of volume and volatility through here. So if it gets up there, it's a level. Most people will get super excited. They'll be like, "Oh, silver's going to the moon," but that's probably where it's actually going to get hit. When everybody gets super bullish, that means they already own it. And of course, when everybody's happy, the market likes to break your dreams, and then the market will reset investors, right? So again, everything has got this upward move to probably the end of January, bullish for the precious metal space. And after that, I think you need to be very aware. You need to be like moving your stops up and locking in gains, because this could get wiped out in a blink of an eye and reset with the markets. Again, I don't know where that's going to be. It all depends on how the economy unfolds. Do we have World War III that gets super ugly and gold and oil shoot up and that might skew things, right? Those are the odd black swan event that could pop up. But overall, now is like a trade. I think you can make 10, 15% to the upside of miners, as like with GDX, for example. But overall, I think you'll be able to pick it up at a much lower price down the road before the next kind of blast off, where they all become little golden rocket ships.
Gold has soared over 29% this year, marking its strongest annual performance since 2010. Central bank interest rate cuts and escalating geopolitical tensions have fueled this rally. Throughout 2024, investors flocked back to the precious metal as economic instability and geopolitical uncertainty reinforced gold's appeal as a safe haven asset, offering protection against market volatility. Many uncertainties loom as the U.S. prepares for Trump's return to the White House in 2025. Given the high volatility in markets, how can investors best position themselves to capitalize on the potential growth of gold and silver soon? We value your thoughts, so feel free to share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.